Some hours ago, I spoke to Tewodros Sisse. He's the Africa Economic Advisory Leader at Deloitte Africa. I started our conversation by asking him if the IMF's assessment that Ethiopia's public debt is unsustainable could potentially undermine ongoing debt restructuring talks.
We have to look at it where IMF is looking at it from a data stress point of view. They always see if a country is defaulting on its bond, so that's one of the precursors that would move it to a high distress debt country. But in my opinion, at least in the past, what we have seen in the past few months, the monetary policy change, the exchange rate reforms, as well as the IMF funding actually moved the country to a more debt sustainable country rather than a more debt stressed country.
Right then. So when we hear from bondholders, like in the negotiations that we had, for example, sometime last year, we understand there was this proposal to have a haircut of around 18%. And they said, no, we really can't accept a haircut of that nature. Now they're essentially saying, look, we believe that there's been a strong enough recovery and therefore, right, this debt ought to be paid essentially as it was. I mean, what position should we take seriously here, the bondholders or the government side?
Yeah, no, it's a very good question. I mean, these are short-term impacts that we are seeing from the devaluation, economic reforms, and other things that the government is doing. So we have to give it time. I mean, there is always shock, and this short-term shock is happening to the economy. So we cannot actually rely this kind of significant decisions on short-term impacts that's coming in. So we need to see a little bit of medium-term and then long-term impacts of the economic reforms to make that kind of judgment and decisions from the government point of view. At this stage where we are right at this moment, it's very difficult to say everything is improved so that we need to move to where it was previously. And then maybe just to add on top of that, I think the 18% haircut is not actually a very bad thing if you look at the returns on the bond in the past few years, and then also looking into the coming years. The bondholders will still make money out of this, but of course it's understandable to demand more to increase your position.
Indeed, and just looking at the performance of the Eurobond, the 2024 one that we're talking about, in 2023, we're looking at a Eurobond that was trading around 62 cents on the dollar. That's gone up to around 82 cents or thereabouts. So if just using that as an example, if I'm a bondholder and I'm looking at that chart, what my inference would be is that, well, someone's taking a position on this and they believe they'll be able to recover a fair bit of the cash that they've put into that bond. So therefore, they essentially are signaling in some ways that they have faith that they will get this thing resolved.
Correct. I think that's also part of the negotiation, right? Why the negotiation is also taking a longer time, and then we see it as well. It will take a couple of months to resolve as well, because what you've said, which is very critical and important, the bondholders are also raising it, but also from the government perspective and from the reforms that's happening. And then, of course, from a debt sustainability point of view, the government will look at it from a broader angle than from returns to bondholders only. So that's where the difference between the two comes, and the negotiation is taking time more than expected to resolve the issue.
Some have described these negotiations as slow and a bit acrimonious. With the benefit of hindsight, granted, we're not over the finishing line yet, right? There's no deal on the table that has, the Ethiopian government and bondholders in agreement. But with the benefit of hindsight, what could have been done better? I mean,
it's very difficult to say what could have been done better. From my angle, that's how I see it. Is the bondholders could have actually asked for better, maybe deal terms instead of outright rejection of what the government proposed. That could have actually reduced the time in terms of negotiation and how to reach that a level where both parties agree. I think that's where now the biggest challenge is from both parties' point of view. And then, in my opinion, it will also take more months now to resolve this matter, unless there is a demand from bondholders' perspective to have a revised terms instead of outright rejection of the government terms.
Looking forward, because some of the arguments that we're seeing from the bondholders is that they're saying, look, coffee exports have gone up by around 60%. Gold exports out of Ethiopia, that's gone up a fair bit. And this is at a time when bullion prices are hitting record highs, almost $2,940 an ounce. that economic picture at the moment looks fairly rosy. But if I understand the argument you're saying is, look, that short term, we might not necessarily have that sort of trend continuing right into 2025 and 2026, right? Prices don't always go up in perpetuity.
Yeah, no, absolutely. You're right. We have to look at it from two perspectives again. One is, of course, this is dependent on commodity prices, coffee, gold, all these commodity prices. And if you look at gold as well, is some of the gold that has been, leaving the country legally is coming now to the official channel. So that significantly increased. The 700% increase that we have seen in gold is due to that. From a coffee point of view, Ethiopia also increased significantly the coffee exports. And then the country currently has a favorable price from a global commodity prices point of view. So these commodity prices actually move, they are also very volatile. So that's why we say the short term may not actually give you the right picture or the correct picture. So you have to give it the time to see the time series, the data to make a decision or demand at least some of these things.